Raising the federal funds rate can be compared to applying a brake to the economy. To be honest, it drives up the cost of many products, particularly those that are purchased with credit. But it also affects things that aren't purchased with credit down the line. For example, you will have less money available for other expenses if your monthly budget is primarily consumed by your mortgage or car payment. Everything is impacted by this, even non-credit things. The fact that the Federal Reserve is making judgments too slowly and using rather outdated data worries me. It appears that the Federal Reserve will be cautious to reduce interest rates, just as they were slow to raise them. Prior to hitting the 2% goal, you indicated that you would be open to lowering interest rates. Do you think there will be a decline in the rate of inflation? To some extent, I am confident about that. That's what the last few years have shown us. I'm not ready to state whether or not we are sufficiently convinced that inflation is declining steadily to 2% at this point. You're going to see even more from Tesla if you thought what we've seen so far was spectacular. The next stage of Tesla's development is expected to be nothing short of extraordinary. We're here to break everything down for you today, from surprising stock price peaks to groundbreaking discoveries that have the potential to completely transform the electric vehicle market. A lot of things are in the works. We'll analyze the most recent financial projections, go into Tesla's upcoming significant actions, and talk about how these could impact the market and your investing approach in this episode. We're also watching Elon Musk and the Tesla Group to see how they intend to handle the chances and difficulties that lie ahead in the upcoming months. Are you eager to learn more about Tesla's Phase 2 plans? Do you want to know how this might affect travel in the future? Then, so that we can begin, click those like and subscribe buttons. Greetings from Tesla Stock News. Hello everyone. Let's talk about some exciting news that may cause Tesla and anybody else who watches interest rates to tremble. Federal Reserve Chair Jerome Powell reported to Congress on July 9 and 10 of last year. This is crucial since his words have the power to significantly affect the markets. The idea that he would lower rates in September is intriguing. Without a question, Joe Biden has had an influence on the economy, and Jay Powell is having difficulty finding a solution. The average American has lost almost $28,000 in purchasing power over the past 3.5 years. Although rate reductions are a good thing, it appears that they are being considered for September only for political reasons. Jay Powell and I had a talk yesterday. One thing to note is that he believes inflation is declining, which suggests rate decreases are imminent. But if they wait until September rather than July, it might spark debate over how politically motivated these cuts are. The Federal Reserve may lower interest rates in September, which would affect not only your loans and savings, but also the performance of businesses like Tesla. So everyone who owns Tesla stock or is thinking about interest rates should pay attention. Speaking about Tesla, they're going through a difficult moment right now due to a slowdown in production. This is not merely a small problem. It indicates that they are unable to provide the lower interest rates that they occasionally provide. They may have to tighten things up in the upcoming quarter as they rush to resume increasing production. Hold on, folks. This cash flow from Tesla could turn choppy. Another worry is inflation. Even if the Fed lowers rates to make borrowing more affordable, the typical person's affordability may not be greatly impacted. It's a mixed bag, with the Producer Price Index, PPI, predicted to rise. Although it's questionable, some analysts believe this might slightly increase Tesla's stock price. Tesla released its most recent profits on July 23, and the excitement is well-founded. This earnings release is expected to be a stock market roller coaster, not simply another update. Although Tesla's stock appears stable, a storm is building that has the potential to cause big changes. We're not just expecting changes with the impending earnings announcement. We're expecting fireworks. Excitement is being added by the rumours, which center on Tesla possibly hiring the former CEO of Uber. This move might provide Tesla with a competitive advantage in the mobility business by bringing in key experience in expanding tech-driven transportation solutions. Everyone is talking about the possibilities. Could this indicate that Tesla's business model could take new turns, such as growing into the ride-sharing market or accelerating their development of driverless vehicles? Discussions on these issues are arising in forums, on social media, and among investors who believe Tesla's approach may undergo a significant change. The supposition is adding a level of intrigue and excitement as the results call draws near. If these rumors are accurate, it may be the turning point that moves Tesla's stock from where it is now to a dynamic new stage of development and innovation. The enthusiasm is being increased by Elon Musk, the consummate showman, who is talking about earnings and a potential robot taxi event. There's an electrifying vibe, almost like the stillness before a storm, as people prepare for huge things. Given Tesla's high price-to-earnings ratio of 102.24 and its estimated $250 earnings per share, some people are unsure if the company is worth this much. One number that jumps out when discussing Tesla's financial data is the PEG ratio, or price-to-earnings growth. At the moment, Tesla has an amazing PEG ratio of 3.16, which is almost twice as high as the average PEG ratio for most manufacturing companies. This suggests that the market is very confident that Tesla will not only continue to expand but even soar. Why is this relevant? Investors can evaluate a stock's worth by taking the company's earnings growth rate into account with the PEG ratio. A high PEG ratio indicates that investors anticipate substantial earnings growth in the future, which makes them willing to pay a premium now. This projected growth rate of 125% over the following 4 years is indicative of Tesla's ongoing innovation and boundary pushing in the energy and electric car industries. Tesla is always changing, whether it be through new model releases, market expansion, or breakthroughs in battery technology. The market's optimism is a wager that Tesla will keep driving innovation and redefining its sectors. High market expectations, however, have raised the bar for the business and forced Tesla to accomplish ambitious goals while also pushing for constant improvements. This high PEG ratio indicates both inherent risks and potentially large returns for investors, whether they are holding Tesla stock or are just considering it. With respect to Tesla's stock price, some analysts believe we may witness peak euphoria. A peak euphoric price of $371 per share has been estimated by experts using the PEG ratio and growth rate. In the short term, this price is seen as unrealistic, even though it might be achievable in the long run. Strong fundamental research suggests that Tesla's stock may soon reach a sweet spot price range of $189 to $275. This is determined by their existing market performance and room for growth. Talk about ahead of schedule. The prices we're seeing now correspond with what the market believes Tesla will be worth by the end of 2026. If you're watching Tesla's stock numbers closely, you should be aware of any significant figures that could indicate future developments. The stock of Tesla has a $231 downward support level. This serves as a safety net because it indicates that even in difficult times, the stock hasn't fallen below this point. Additionally, there is a make-or-break level at $258, which is a crucial moment. It may be possible for the stock to rise considerably higher, possibly to $295, if it can break above this $258 barrier. This can indicate a big bullish move that draws in more investors and raises the price. Thus, individuals who are following Tesla's path should be alert for these figures. The trip from $258 to $295 might happen sooner than you might expect, particularly if Tesla keeps coming up with new ideas and using them to its advantage in the marketplace. These figures may determine your next course of action, regardless of whether you plan to buy, hold, or sell. That concludes our in-depth analysis of Tesla's stock dynamics, folks. We've looked at everything from crucial support levels that can indicate significant changes in the stock market to the probable peaks of Tesla's peak euphoric price. We've examined the PEG ratio and the insights it provides regarding